Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Thursday, May 28th. We're looking at another day, another rally. Seems to be pretty much I could pretty much just say this at any point in time. Yesterday was a little bit different. We saw some rotation in the morning, but by afternoon everything would rally more or less. So right now this trend is relentlessly higher. We can argue whether or not it makes sense. I think you can only rationalize it by weight of money, and whether that weight of money is coming from the Fed and or stimulus checks being invested by individual investors. My feeling is it's some of each. Do I think that's a sufficient reason for equities to be moving higher? No. In the long run, but in the short term, it absolutely is. It's a tough market to fight. I count me among the non-believers, but it also is, as trading discipline tells you, it's not right to be short right now, at least in the short term. We can look back at this in a couple months and say, well, it's probably may have been the best time to short. Who knows? But right now, going into the end of the month, going into a start of a new month, buying the dip is really very much in favor. And whatever economic news there is, if it's bad, it can be rationalized as well. It's going to get better. Or if it beats expectations, you could say, well, it's beating. It's not as bad as we feared. Better than feared is not necessarily a great reason to be bullish, but that becomes the mindset right now. So where do we go from here? Right now, and I'm speaking of this not as an investor, but as someone as day-to-day trading, because this is more or less a daily market update. It's a very difficult trend to fight. We've blown through every resistance level. The money still seems to be flowing in. We'll see tonight from the Fed whether their balance sheet expansion continues. We saw a lot of the stimulus money going into individual investor accounts. If you're a new investor on our platform, good, welcome. We like new investors, but that weight of money tends to be chasing themes, and my fear is that money has entered the market and is more likely to leave the market than to stay in the market, because presumably a lot of the people who received stimulus checks need the money. And so if you're using it as a source of short-term savings, that could provide a little weight on the market. But as of now, trend is your friend, I guess. If you're not comfortable, and no one says you have to be with a market that just sort of moves more or less just because things are not as bad as they seem, let's put things in perspective. What's different? We're basically where we were, a year ago. What's different between now and then? Are company earnings better? No. Are projected earnings better? No. Are any conventional are dividend payments higher? No. What's different? Money. The Fed is first threw in money for the repos from, let's say, the August to February period, expanding their balance sheet roughly by 10%, and then, unleash the howitzers on the market. On money markets over the last couple of months, raising their balance sheet by about 30%. It does seem to be going up at a decreasing rate, but it is still going up. And again, those figures get released Thursday afternoons after the close, so we'll have a clearer picture tomorrow. That doesn't necessarily matter in the short term, because there's usually a 2 or 3 month lag between the Fed making big monetary changes and seeing them reflected in stock prices. So right now you've got this narrative, which is just buy every dip. This is not somebody advocating that. I'm just telling you what's going on out there. And if you think about it, if you're curious about that, look at what the NASDAQ did this morning. It was lower by about 1%. The market was certainly unnerved by some of the president's comments about regulating Twitter and online speech. It's not clear that he can do that, which probably is a reason why we bounced a bit. But that turnaround was sharp, dramatic, and yet in the minds of the buy the dip people, that was yet another dip to be bought. Buy the dip works great until the day it doesn't. And right now it seems to be working. And if you have the Fed at your back, odds are it's going to work before it stops working. So do I like the market? No. Do I want to be fighting the market? No. And that's my mindset right now. And we'll see when that changes. I guess it was Keynes who said, when the facts change, I change my mind, or I'm probably misquoting him horribly. But that's really what's going on now. The narrative is that markets are moving higher, stocks are moving higher, investors are testing the waters, investors are buying dips. When that changes, I hope I'll let you know as quickly as possible. When I see that change, hopefully I can let you know before that's possible. As of now, that's what I'm seeing. That's what I've been seeing. And as long as we continue to see it, you'll hear me say more or less the same thing. Have a good one, everybody.